Bain Capital crypto partner and head of regulatory policy, TuongVy Lee, joins us now to chat about just this, what's going on with the SEC. Welcome.
Hi, everyone. Thanks for having me back.
Of course. Thanks for being with us. Let's get right into it. The SEC has been criticized for regulating by enforcement. Just giving your experience and watching what's going on here, what do you make of their moves?
First of all, I think, even though these cases may have sent shockwaves through the industry this week, neither of them were surprising. Both of these cases have been expected for some time. It was just a matter of when it would happen, right? And then even in terms of the specific charges in them, even a lot of those were expected, especially after, the SEC sued two smaller crypto exchanges earlier this year, Bixi and Bitrex. And the main charges in the Binance and Coinbase lawsuits largely mirror those, acting as an unregistered exchange, broker, and clearing agent. And then even the staking charges in both of these cases were no surprise. They, again, largely mirror the allegations in the SEC's case, shutting down Kraken's staking service earlier this year. And in my view, it makes clear, I think there were some questions after Kraken happened, whether the SEC would consider any kind of staking service to be compliant. And I think it's pretty clear now that they probably would only say that self-staking, where you're literally setting up your own node, is okay. I think they're saying any kind of staking as a service is probably a security. But besides those charges that were largely expected, I think there are some interesting additional ones in both Binance and Coinbase. So, of course, in the Binance case, there are charges there that really seem to echo what we saw in FTX, right? These allegations that Binance and CZ, were fraudulently representing that Binance and Binance US were totally separate and independent entities when they really weren't. And then we saw allegations after that CZ was diverting like $12 billion worth of customer assets. He was misusing them and using them to fund like some other entities of his. So, I think that's pretty explosive. And again, it sounds very FTX-like. And the other unusual thing is that they ask for all kinds of temporary and preliminary injunctive relief. So this is basically when you go to court and say, you have to let us act immediately to seize or shut something down or freeze assets because there's imminent danger that customer funds will be lost. So that's pretty remarkable. And it's not something that the SEC does often. And it's also important to keep in mind that they're not asking for this in the Coinbase lawsuit. Right. So I think those are some of the interesting things in Binance that were maybe unexpected. And then for Coinbase, some of the unique charges there are the SEC is alleging that Coinbase's prime brokerage service and its self-hosted wallet offering were unregistered brokerage services. And this is really notable because I think this is the first time that the SEC is alleging that a self-hosted wallet offering, which is basically just a non-custodial software product that allows you to connect to a decentralized exchange to trade. It's the first time that they're alleging that a self-hosted wallet offering is providing a brokerage service. So I thought that was really interesting to see.
So I know that we've talked, first of all, happy to see you back on the show. And we've had a lot of people on this show and just in general in crypto and in Twitter talking about this whole idea of, Coinbase really tried hard to register, but, the SEC wouldn't let them and they kept getting stonewalled. But I think you'd be particularly well placed to actually go into the details about that. What do they mean when they say we tried to register, we tried to work with the SEC? Can you break that down for us?
Yeah. So, I don't know if you guys caught there was a really interesting congressional hearing this week. And one of the witnesses in that hearing was Dan Gallagher, who is the head of Robinhood, so Robinhood is actually, it's more than one entity, right? It's a main entity where you can go online and trade, a whole host of traditional securities, just like a lot of online brokerages allow you to do. So they have that, but then they also allow a small number, like a much smaller number than something like Coinbase or Binance, a small number of crypto tokens. They also allow their customers to do that, but they allow them to do that through a separate Robinhood entity, right? So he was asked in this hearing, he was asked, well, you're an SEC registered broker dealer. Robinhood is, right? Can't you just move your crypto over to your registered broker entity and let your customers trade them there? And he said, no, the current regulations do not allow crypto assets to trade alongside traditional securities. And the infrastructure is not there. So that's why they have to do it through a separate entity. And he said they've been working for 16 months to get what's called a special purpose broker dealer license from the SEC that would allow them to let their customers trade crypto through a broker license alongside the traditional securities that they do under their registered broker entity. And the SEC told them no. So this idea that you can just come in and register and that no special accommodations, whether it's, new regulations or new legislation needs to be made for crypto, it's just not true. And I mean, a lot of it is by virtue of the technology, right? So you can trade crypto 24/7, 365 days a year, whereas with traditional securities exchanges like the New York Stock Exchange or NASDAQ, the trading hours are much more limited. And then for traditional securities, in order to trade through an exchange, you have to do it through a registered broker. With digital assets, this isn't necessary because you can conduct trades directly without the need for an intermediary, right? So if you've tried to force crypto into that existing securities regulation mold, you'd lose out on real-time settlement without it being really clear, like what risk you're trying to address exactly, right? As long as the exchange isn't engaged in market making or anything else that could create a conflict of interest by them acting essentially as both the exchange and the broker, there's no real reason to force those into two separate functions or entities, right? So requiring a crypto exchange to do that would basically mean that they couldn't act like a crypto exchange anymore.
Just to clarify one point here, though, because I think this is really interesting. Like, there's a lot to tease out here, but basically, it seems like, the SEC is saying, as you just said, okay, you're not fitting into this box, right? But couldn't you argue, and I know that nobody on crypto Twitter would argue, but couldn't one argue that the SEC kind of has a right to take that position, just in the sense that, yes, they have one box, right? And that's their box. And if Coinbase doesn't fit that box, then that's not really the SEC's problem, right? The SEC is okay, here's what it is to become a securities exchange. For all the reasons you mentioned, you do not fit into the box of a securities exchange, but it's not really the SEC's responsibility to change what those categories are. It would have to come from somebody else like Congress. I'm just curious what you think about that argument.
Yeah, I mean, I think that is a legitimate argument, right? And I think that is the view that a lot of people in the industry take. And that's why they're turning to Congress to act and to say, there's just no way for a crypto exchange to legally exist under the existing securities laws without basically transforming the very nature of it. I mean, if you're just trying to recreate traditional finance, I guess you could fit it into the existing mold, but it would just be it would be nothing like in its current form, right? So I think a lot of people do take that position, which is this isn't the SEC's place to act. Congress actually needs to come in because what a crypto exchange is just so different than what the existing securities laws can accommodate. And so Congress should come in and create a new model where a crypto platform can register and comply with requirements that actually address the unique risks that crypto trading presents, right? Which are very different from traditional exchanges. Just as an example, if you're talking about something like custody, right? So with traditional exchanges, with traditional brokers, there are really strong requirements around what it means to take custody of customer assets, customer securities, and who is allowed to do that. Custody in the traditional securities context means something very different than what it does in the crypto context, where a crypto platform, a crypto exchange like Coinbase is typically taking custody of customer assets, and they'll control that custody through private keys, right? If they're self-custodying some of these assets, there are other forms of custody that they engage in, but one form is they manage the private keys, right? I mean, that obviously poses a lot of different questions and potentially risks that just don't exist in the traditional securities context, right? The other sort of unique things about crypto exchanges and crypto trading have to do with clearance and settlement, which works very differently on a blockchain than it does in the traditional securities context, right? In the crypto context, you have to ask questions like, when does the legal transfer of the ownership of a crypto asset occur? Like, what happens in the event of a disruption, like a 51% attack, or other issues that could arise when crypto assets are being transferred on the blockchain? What happens in the event of a hard fork, right? Does the owner have access to the new asset that might result from the hard fork? These are questions and risks that are totally unique to blockchain. And, that the existing regulations obviously do not address at all, because this doesn't come up in the traditional securities context. So, Emily, I think you're exactly right. A lot of people would argue that trading in crypto and what it means to be a crypto exchange or a crypto broker or a crypto custodian, all of those things are very different in the crypto context than they are in the traditional context. So much so that the SEC can't even address it. It has to be Congress, and it has to be totally new legislation. And that's what, much of Congress is working to do right now, right?
Thank you very much. That was TuongVy Lee, partner at Bain Capital, crypto, and head of regulatory and policy